When you enter the world of investing for the first time, everything looks like a potential opportunity and there are so many choices out there. And when you start looking a bit further, everyone looks like they're trying to sell you something. And it can be one of the really hard things when getting started and trying to find information online to work out who's telling you good stuff that's actually going to be helpful to your future and who's telling you stuff that's maybe not in your best interests. Maybe it's really uneducated information, maybe it's trying to sell you something. I mean, there's a lot of money to be made in the world of finance, and often you'll see ads on YouTube videos that are promoting various things that might not be in your best interest. And there's forums online, and you don't always know if the person posting about certain companies is actually paid by that firm or employed by that firm to promote that. And that's commonly referred to like stock pumpers, stock promoters, and they can get in trouble for that, but often they don't get caught. So it can be really hard to look through all that information out there and work out what is actually going to be the right stuff for you to take action from. And this is why I like to talk quite a lot about some of the common investing mistakes to avoid to stop yourself losing money when you're getting started. It's good to actually learn some of these lessons yourself, but there's obviously some key mistakes that first-time investors make, and I've made them, many of my friends have made them, that you can avoid to hopefully not lose money because of one of these mistakes on your first time. I mean, most people do lose money at some point, even the best investors, but hopefully if you think about some of these different tips of things to avoid, it can put you in a much better position when you're getting started and you're looking at all the information online. Now, obviously this is not an exhaustive list and there is a lot out there online, but it gives you a few tips that when you're navigating Google and anything to do with finance, you can probably avoid some of these things. So the first one to think about is the Great Aussie BBQ Tip. Now, this is when your friends, your Uber driver, your Christmas party, your colleague, they tell you, hey, I know about XYZ company. It's going to go up 100%. It's a sure thing. You have to buy it. And I'd say that most of us have lost some money at some point on a barbecue tip. It's quite funny because often when you start getting interested in finance, you'll be looking for different ideas and you'll ask people about their suggestions. And it's always something to be wary of because often these things are passed around like rumors where they've just gone from one person to another and no one's actually done the research or looked into this company, or I mean, maybe even worse at the more sinister level, they've got something to sell there because they're promoting that company, and that can often be a danger online. I mean, if you're getting the recommendation from a friend, maybe they've just heard it from someone else or they're just really excited about this idea, but sometimes when you get this idea or this tip online, it can be because they've got something to push. Often there's online Facebook groups and forums that are talking about different stocks and investing ideas. And it's always careful to look at this with a grain of salt because you don't know what's in it for them. They might be heavily invested in the company. They might be trying to push the stock up before it falls, anything like this. So I'd just be wary of this. I mean, some people will tell you they've had great success from getting a barbecue tip, but it's just something I'd have a watch out for as well. I mean, nothing to say that it couldn't be a good tip, but I think a lot of us get caught out because we're recommended something by a friend and then we invest in that and then we go, why did I ever do that in the first place? And we always say, don't invest in something that you don't understand and you haven't done some research on first. So maybe it's a great tip, but do your own research. And that's probably my best advice with most things. My second tip is that you should always question a free lunch, a free seminar, a free portfolio review. A lot of times people will offer this as free, but as we often say, there's no such thing as free lunch. So you should be really careful that if you're offered anything, a service, an incentive, have a look at why it's free and what have they got to gain, because everyone ultimately is going to get paid and is putting a roof over their head somehow. So got to work out why they're doing what they're doing. And I think that's always really good to ask people when it comes to, even if a financial advisor says a free consultation, ask them how they make money. If someone's offering you a free portfolio review, how do you make money? What have you got to sell? And I'd always ask those questions, and it often puts people a little off guard because they're expecting you to see the word free and go, I want you. I want this free thing, because we light up at the word free a little bit. So I think it's really good to always add a critical lens when you see anything for free or heavily discounted, and always question what's in it for them. Why am I getting this for free? Am I going to be upsold? Are they going to be taking my information? Remember that if something's free, that you can often be the product nowadays, and that's a lot of with our social media sites collecting data. So always be careful about these sort of things. And I mean, investing sometimes makes you a little bit cynical, but really question everything and think about why people are doing what they're doing. The next common mistake I see people making is just following the trends and seeing what other people are doing, and whether that's a hot stock at the moment, whether that's a particular investing trend that people are really excited about. I mean, some of the ones in recent years have been marijuana stocks and cryptocurrencies and lithium, and I mean, more recently in Australia, some of the buy now, pay later apps, and everyone's getting really excited. There's kind of that frenzy and manic behavior that if you don't get in now, you're going to miss out. And I think Bitcoin was the biggest example a few years ago now of that frenzy that everyone was talking about it. You would go to the hairdresser, you'd go get the taxi home or the Uber, and people would be, what do you think about Bitcoin? I'm invested in Bitcoin. And it was just a thing of no one doing their own research, no one really looking into what it was. Everyone was just talking about it, and everyone felt like they had to keep up and invest in it too. So I'd be really careful when you're following a trend, following something that's been really hyped up in the media, that you know what you're doing and you've done your own research, because that can often get people, it can often catch people out because they're only hearing about it after all the excitement's happened. So you'll jump in right at the top just before the bubble bursts. And I think it's human nature. We get greedy, we get really excited. There's all sorts of emotions involved, but we can often get caught up in something that we don't understand ourselves. So that's another thing to be really wary of. Another big risk when investing is when someone's promising you returns that are out of this world. And sometimes you'll see this on brochures saying you're going to be double your money in a year. You often see it on online scams as well, but it's something to be really mindful of, and have a look at some of even the historical charts that Vanguard put on their website. And I'm sure there'll be a link in this course as well, but they actually show you what asset classes have done historically over the last 50 to 100 years. And you can look at these charts and go, what does a realistic rate of return for this type of investment look like? And if you're going to a seminar that's saying you're going to double your money in the next 2 years, have a think about that and if it's realistic, because they could talk you into anything. And you've actually got to common sense check that, because it could be a really risky investment. They could be lying. They could be doing something illegal. It could be a Ponzi scheme. There's so many things that could be behind that. But it really helps you when you're getting started to actually have an understanding of what a common rate of return for a different investment asset class is, and make sure that it's within reality, what they're offering you. I often see there's often property seminars, because it's a really unregulated industry in Australia, that say you're going to double your money in 5 years. And if you have a look at property, that's not usually the case. So it's a really great idea, as I was always told by someone I knew growing up in high school, to common sense check everything and bring it back to reality. And that's something you can do as an investor. You can look at what historical performance has been, and you can common sense check what you've got today to whether that makes sense or not. Another way a lot of new investors lose money is by deciding when the next big day trader. And honestly, this is something I mucked around with a little bit at the start of my investing journey, and just jumping in and out of stocks on a daily basis. And yes, some people do make careers out of being a day trader and investing in and out of stocks and investing in daily trends and daily movements and different strategies there. But that's such a small percentage that a lot of us can get distracted and thinking that's a great use of our time. And for most people, it's not a great use of their time, and they're better off thinking about the basics of investing and long-term strategies they can think of. Because for most people, a long-term investment strategy with a 5 to 10 year plus time horizon is the best way to go. And deciding you're going to jump in and out of stocks on a daily basis and keep up with the media is usually a way for most people to lose money. And finally, the last one I want to talk about is having no idea what you've just invested in. And I think so many times that's the way that new investors can lose money. I mean, I've done that myself. just jumping into something, whether it's because of one of these tips, because someone told you about the stock, because you saw it online, because you thought it was a good idea, it's really important to actually get some of the basics down pat first. And even if you're getting financial advice or a professional's recommended a certain product, I still highly recommend having a basic fundamental understanding of what you're investing in. There's always risks involved with investing, and so if anyone's promising you something other than that, I'd be very wary. And it's really important to always do your own research and understand what you're doing so you can understand where your money is, what it's invested in, who's managing it, what happens if something goes wrong. And I think we don't often ask that question of what happens to your money if the firm collapses or something like that, because I don't know, are we very trusting people here? Maybe, who knows? But we should ask those questions. And a good way to do that is by looking at the product disclosure statement, which is a legal document that most investment products have to provide that explains how everything works. They have to explain the risks, and it goes through the Australian Securities and Investment Commission, ASIC, so they'll review that as well. But also give the company a call and ask them these questions and put them under the pressure to see if they can answer these and whether they squirm, whether they provide you a standard response, whether it sounds legitimate or not. So I'd always do your own research. Make sure you understand what you're investing in and don't just take the advice of someone else without doing your own research.